Over the last couple of weeks, I've been diving super deep into the history of the Australian property market, particularly Sydney, Melbourne, Brisbane and Perth. And what I've found is I believe we're coming into one of the most exceptional buying opportunities in the next 12 to 18 months that we've seen in a long time. Now, in today's video, I'm going to explain some of the sentiment at the moment and the difference between that sentiment versus the real Australian economy. I'm super excited to not just talk about some of the things to look out for, but some of the incredible buying opportunities coming.
Now, we've noticed a pretty big shift in sentiment at the beginning of 2022 here. So what is sentiment and why is that really important when we're talking about the Australian property market?
You know, it's a great question, man. Like, sentiment is just basically the feeling that things are going to be good short term or negative short term. Now, it changes like the tide. Like, it can be absolutely bullish market, everybody's excited to buy something, and very, very quickly the wind can turn and everybody can freak out. Now, there are so many other things that governments around the world can use as leverage to stimulate or pull back an economy, but at the heart of it all, it's whether I feel good about going investing this year or not, and it has a crazy effect on not just the price that you pay for things, but the expected return short term as well.
Now, let's just jump straight in and talk to the elephant in the room. So what is some of the negative sentiment that you're seeing around the world at the moment?
Cool, man. So it's kind of like the butterfly effect, right? Like, any one thing distantly going on somewhere else can create waves across the world, but there's a couple of butterflies moving at the same time at the moment. So one is obviously the fact that the stock market has had a little bit of a correction recently. Now, when we look at the history, there's a great book by Tony Robbins, Money Master the Game. And what we find is that for the last 80 years, the stock market in any given year has had a period of time where it's declined by somewhere between 10 and 15% at some point in the year. So when you know the long-term history, these little fluctuations mean nothing to you and I, but they do create panic in the market. Now, the main reason the market, outside of the Russian conflict, which we'll talk about in a moment, is having this bit of a flutter at the moment is because we're moving into a period of high inflation. And so I won't go into too much detail, but what it means is that people finally realize that the tech stocks all over the world were massively overvalued. And as their cost of delivering goods has increased, it means it's eroded their profit margin and therefore their valuations. And so a Tesla that was valued at 20 or 30 times its annual revenue has now been accurately valued recently. And therefore, because those tech stocks made such a big chunk of the market, as their revaluations have come back to earth, the entire market has taken a dive. Now, if you know your history, you know that in every second half of a cycle for the last 50 years, tech stocks have taken a dive. The second one off the back of that is crypto. Obviously, crypto's taken a 40, 50% hit recently. I've got a lot of clients that love that space and a lot of friends that know a lot more about it than I do, and they're really bullish and positive about the future. But again, when you look at the pattern in crypto, almost every 18 months since its inception, it's taken a 30 to 60% dive and then recovered off the back of that sentiment medium term.
It's just when a lot of this stuff happens at the same time, it kind of makes people feel a little worse.
Then we've got the Russian-Ukrainian conflict, which is just, it breaks my heart that we're even still fighting each other in this world. It's like, let's just come from a place of kindness, guys, and sort stuff out. But that's occurring at the moment. Now, thankfully in Australia, if you look at CBA's update, we don't have a huge amount of trade with Russia. The Russian economy, even though it is large, is a bit of a drop in the ocean in terms of the global one. And that's why markets are starting to rally already. They've already priced in that conflict at the moment. You've got the talk around interest rate rises. There's some misinformation out there at the moment that they're going to have an absolutely detrimental effect to the Australian economy. If you look at previous videos we've done where we talk about interest rate rises and go deep over the last 30 or 40 years, you'll find that historically speaking, they can get significantly higher and property prices in the past have still risen off the back of that. It's an election year as well, which is a little bit unstable, I suppose, and obviously there's some people out there that have opinions on this. We've just had the Queensland floods as well. Sydney house prices have recorded a small decline in the last month for the first time since 2019. That again gets some people sitting on the sidelines going, well, what's going to happen next. And then I like this one that you mentioned, man, fatigue. I think the market's just gone through such a run in Sydney and Melbourne particularly, plus a lot of the other states in Australia in 2021, that it's very normal after 20, 30% of growth for there to be a natural, hey, let's just,
Take
sit
a
back
breather.
for a sec and let's figure out what's going to happen next. Now, that absolutely makes sense for Sydney and Melbourne that have gone up 100% in the last 10 years. But there's parts of Brisbane that we were looking at that you can buy for under 450K right now that have literally gone up 2% per year for the last 13 years straight. Like, I was having a rant off camera about this because it fucking pisses me off. Like, the fact that the media is like gonna blanket wash property as like one big basket in Australia. And I do agree. Like, I think some of those Sydney house prices are a bit like tech stocks right now. And we'll see the water drain out of there at some point down the line. But if people are like not going into Perth, Darwin, Adelaide, Brisbane because of what's happening down there, people are going to miss serious amounts of money in the next 5 years off the back of doing that.
It was really interesting to see, all of those different things, and you can understand why there's been a bit of a shift in sentiment because, there's layers to all of that. But when you peek behind the curtain, there's some good things to take out of that obviously as well. Now, it was CBA that came out saying that there's over $200 billion in Aussie redraw accounts and offset accounts. So there's lots of money sitting there against the loans of people's properties at the moment. Obviously the RBA feeling confident with the economy, confident enough that they can actually increase the interest rates because that is something that they can use when things are either good or bad within an economy. Do you want to talk a little bit to that?
Yeah, like I love that, man. Like, it actually shows the strength of an economy when rates are being lifted. And historically speaking, like, as the economy strengthens, I think CBA in an article to us last week said we've got to be able to differentiate in the next 2 years the strength of the real economy versus the instability in financial markets because of this sentiment at the moment.
Right.
And so there's a very big difference. On top of that, between now and 2025, we've got over $220 billion worth of Australian government spend on infrastructure. We've got interest rates according to CBA. Yes, they'll be lifted, but they're going to hold at a very, very low rate for the next few years. We've got the likes of the Phil Andersons of the world saying that he thinks Australian properties could increase by between 50 and 70% between now and the end of 2026. Like, if you start looking around at what the economists are saying, like, it's actually completely contradictory. They're expecting rents in Australia to go up by between $100 and $200 a week per investment property over the next year. Like, this is just insane stuff. But for some reason, a lot of fear around other events is affecting the financial markets and particularly the property market at the moment.
And this is the thing with sentiment, right, as well. Like, it is something that does drive markets, it controls markets, but it's certainly not the defining factor for a market. You've got to look behind the curtain, you've got to look at the actual fundamental economic position of any particular market or any particular asset that you're thinking of investing in. I think that's why, doing additional research and, going a little bit deeper than the average person is really important, and not just looking at those articles on maybe realestate.com or on those major media outlets and maybe trying to get into that information from CBA, from NAB, from the Australian Financial Review, from Phil Anderson and Ray Dalio and Catherine Cashmore and Akil Patel, all of these people that are actually quite bullish over the next 5 years, and trying to understand why they are actually bullish about it, and not just going, okay, I'm going to retreat because of X, Y, Z, but, I'm going to try and see the opportunity in this particular market and try and take advantage of that, and rather than just sit on the sidelines until I feel comfortable. That's why it's just so important to really truly educate yourself so you understand what's actually happening.
I love that so much, man. Now, there's two things I wanted to touch on education here. As a history geek and a data dude, I went back and had a look. So in terms of the 5 years that we're coming into right now, which is the second half of the real estate cycle, hot tip, second half is where things really kick off in the markets that haven't already pumped. But between 2003 and 2007, leading up to the last GFC, property prices in Brisbane went up 76% in that 5 year period. Now, if we go back to the cycle before that, between 1985, the year I was born, and 1990, so the real estate cycle before this last one, prices in Brisbane went up 73% over that 5-year period of time. Now, when Phil Anderson makes a call of a 50 to 70% gain over the next 5 years, he's not just pulling it out of the air. It's absolutely based on previous cycles. Now, whether that happens or not, Simon and I have zero idea, but it is exciting to look back at the history.
And I love that so much. And, you know, some of the things that we're seeing on the ground at the moment, because, you know, we're talking with real estate agents every single day. We're looking for quality investment opportunities every single day. And fortunately, we don't just couple the Australian market as one big market. We don't even couple Brisbane as one big market. There's certainly markets within markets and you can use them to your advantage. But what we are seeing is that real estate agents are picking the phone back up and reaching out to us on a much more frequent basis and presenting us with off or pre-market opportunities. We're starting to see that the average days on market is picking up a little bit. So we're starting to see those listings increase a little bit more, but we're also seeing that buyer activity drop a little bit more. Now, if anybody was out there trying to buy a property throughout 2021, they know how hard it is to buy a property in a 30% growth year. So I think this is just such an amazing short-term opportunity to be able to have more properties to potentially look at, to be able to maybe negotiate a little bit better with the real estate agents to get yourself a much better deal. It's so tough when you're going to look at a property and the real estate agent is setting your expectations at $700,000 and then the property ends up selling for over $800,000. It like feels like you're always losing, but we're starting to see that shift a little bit at the moment, which why we absolutely love the opportunity in the market at the moment from a buyer's perspective.
Now, me as a buyer, bro, like the second thing that I wanted to talk about in relation to education is I don't buy personally, and I don't love buying when markets are going absolutely through the roof. I am much more of a bear. I like when market sentiments turns. You know, as scary as it is, I do my buying in the years when everybody else is freaking out. Yeah. And the reason I do that is because when this happened last time, there was a point in 2018 where a guy got on TV and said that the Australian market was going to decline by 50 to 60%. I wish that guy had to pay everybody out for the money that he lost all of the Australians in the last 5 years since he said it. It's funny because that guy went and bought a shitload of property in Brisbane last year. In 2018, we saw prices in Melbourne decline by about 12.5% at one point during the year and about 15% in Sydney. Now, in Brisbane, prices sat flat because it was in a different stage of the cycle, but there were opportunities to buy houses for absolute steals. The same thing happened for about the first 3 to 5 months of the COVID in 2020. I think it was from about late February, March, all the way through to July. There was periods of time where we were literally the only people rocking up to an open home for 3 months in a row. Now, we bought during that time literally almost 100 properties for ourselves and our clients. And what I've found is that these short-term dips in sentiment, as long as it's not at the stage where we're expecting a GFC, which historically right now we're not, are absolute pockets of gold. And I really do believe that the next 3 months, 6 months, 12 months, 18 months are going to represent a once in a 10-year again buying opportunity for those smart people. An example of this was in 2020. One of our clients bought a place in Cronulla Beach for $1.3 million because everybody else was freaking out. And the guy was freaking out and overreacted to that sentiment at that time. That property just got revalued for $3.9 million. This guy's made over $2.6 million in 2 years off the back of being able to stomach it. Now, I know so many of our clients that are watching this are super excited about this time. I know that we'll be helping you guys move forward. But for those of you who haven't been through this with us before, we'd love to offer you a one-on-one strategy session where myself or my brother Simon can talk with you about where you are today, where you'd like to be longer term. We can actually educate you on the history and send you a whole heap of information that you can go and back test online yourself. And then if you become one of the small number of clients that we work with each month, we can help you enter this market. We can help you identify the suburbs that have done 2 to 3% per year for the last 10 years instead of 6 to 12% per year. We can help you pick the eyes out of the market, smash the agents at the moment while they're not getting as much demand, and hopefully get a ridiculously good outcome that in 5 years, 10 years, 15 years time, you can look back and go, I could stomach that, and I'm so grateful I took advantage of that and set myself up.
You know, the reality is I'm actually kind of happy that things have slowed down. You can't sustain 20 to 30% growth years every single year, so we need to have a slowing effect. And, you know, places like Sydney and Melbourne, they're super, super expensive. So the fact that those markets may come backwards a little bit, it actually enables people to get into the market, to purchase their home, or to look at alternative markets like a Brisbane or a Perth that are in a much better stage of their real estate cycle to capitalize, and not trying to generate those short-term returns, because we know real estate is a longer-term game. You know, having more of a longer-term outlook like 10, 15 or 20 years, you know, there's some really, really positive stuff that can be happening with the 2032 Olympic Games coming to Brisbane. It's going to create a lot of jobs. It's going to create a lot of infrastructure. And based on, you know, Olympics going to other markets in the past, it does have a positive impact on real estate prices as well. So, you know, I think changing that perspective from short-term mentality to a longer-term mentality is going to enable you to safely enter the market and create the right plan to set yourself up for the longer-term future. Because the reality is, if we do nothing, then our situation's going to stay the same forever. But if we can educate ourselves, if we can surround ourselves with the right people and create the right strategy and safely execute that strategy, your future could be limitless.
Whew,
that's a wrap.
That's a wrap.
Getting cool,
bro.
Yeah. Oh, sweaty. So sweaty. Oh, that's good. That's so nice.